Good morning, everyone. Another video for the third week of January. Nifty structure, right? So we all came out of a very complex move recently in the past week, and we got a very good blasting upside move as per the time cycle, right? Everything was updated for you guys on Twitter, and Twitter, you guys already saw how we knew that if this is a triangle and if there's a breakout coming, we are going to hit 21,900 level, right? So for that, what level did we have? We had a pivot zone around your 530 to 21 555, this 25 points zone, right? So we had this as a pivot zone. If market is sustaining above this, it's a bullish sign, right? So we had this, we had a breakout, everything went as per plan. Now what next is the question. First, this video I'll divide it into three parts, which is very important. I'll merge all of them. This three-part video is very important. Why? Because there are some roles a retail trader has to play. Like what? The analyst role, right? This I've already explained to the advanced concept members, right? I'll just explain it to everyone else. There's an analyst role everyone has to play, meaning you have to analyze the structure, you have to analyze what are the good zones for entry and all that. Okay. Then there's a trader role, trader who executes the trades only based on the rules, risk per trade, right? Risk per week. Execution is on the trader here. Then the next one is the risk manager. So for a retail, one single person has to do all these three things. Okay. But in institutions, super web banks, and big hedge funds, they have different teams for this. That is up to them. How we don't have teams. You're a small retail trader, right? So you have to manage all three of them in a single shot. For that, the only way to do it is that you have to analyze it first, then you have to prepare your own trade plan with risk per trade in the uh, entire report, then manage your risk like a risk manager. So recently, what has happened here is very simple. We had a wave 4 setup, right? In this wave 4 setup, in a shorter time frame to medium time frame, a single simple thing that this is not going to fall below your 38 to 50% zone, right? If you mark your 38 to 50% zone, right, it's coming around 21,500 to 21,400. This I have repeatedly taught you guys so many times that 38 to 50% zone is what it is, your zone of continuation, right? As long as this zone is protected, right? As long as this zone is protected, this market won't fall down. Okay, this zone has to be protected by the bulls. As long as it's protected, market will continue its rally on the upside. Okay, so what has happened the past week? We had your US CPI data, we had the Fed, which the government which released its data. It came a little higher than expected. Regardless of the data, for us the data is not important, the date is important, right? So regardless of all your data and news points, we don't care about what news points are coming. We care only about the market structure. That is our main area of focus, right? We had a triangle type setup, two validation points. First one, I know everyone at this point is very confused because of the complex correction. This does not happen often. It happens rarely, but once it happens, it washes out everyone. Okay. All, on social media, all your genius gurus, all of them will get washed out in this kind of move in the market. It happens very rarely, but the only advantage you have, if you have learned the beginners and intermediate course, which I put up on YouTube, right? It's available in 4 different languages. So go have a look at it. Learn market structure first. So when you know this structure is your wave 4, there I've repeatedly told you wave 4 is the most dangerous wave. It will chop out all the retailers, right? This is what has happened in the last week. It's not common, but once it happens, it is very dangerous. So you have to manage your risk at this time. 38 to 50% zone was protected. Very simple. 21,900 also was hit in the last week. Everything as per plan. Going forward, what do we have next week, right? So next week, there's no major news events. Let me just look it up. There's no major news events. This is the website called Trading Economics. You can note it. You can go to the calendar section. Let me see. Monday, we have wholesale price index food. That's not does not move our markets much anywhere. So yeah, not much on the news front. Again, the news data point is not relevant to us, right? Everything is baked in the charts, so don't have to look at the news points. Just note that date if there's a big high impact news event. Initial jobless claims is on Thursday, 18th. We can note that date. Otherwise, nothing much. Okay. So as per our structure, right, the last update I gave you on Friday evening was your channel line. So those who have seen the YouTube course already know this, right? Channel line. So as long as this middle channel line is sustaining on the upside, this is nothing but your wave 3, right? As long as your wave 3 is in play, you never short the market. You never short the market, or else you will get wiped out of this account. Why? Because you never go against the wave 3. Okay. So what do we do here? Very simple. Smaller time frame. You wait for the wave 4 to come, a dip, right? Again, what you have to do, measure your 38 to 50% zone. As soon as this zone is achieved and market bounces from here, again, we are not predicting the market, we have to react to it, right? Before you react, you need a plan. You have to think 2 steps ahead, 3 steps ahead. If you're a short time trader, if you're a big investor or something, that's on you how which time frame you use. Those who use your weekly and daily time frames must have at least 2 steps ahead plan. So you have a plan. The issue what happens here is people start to execute the trades before the plan is confirmed, right? Which path the market is going. Before that happens itself, people start to execute their trade setup. Let the setup form first, okay, and then you look for your strategy which you're going to apply. I'll share one strategy with you. I don't share strategies. I'm not a SEBI registered analyst, right? So I cannot tell you what to buy. I cannot influence you like that. The only thing I can tell you is what I am planning and what I look at in the markets. So right now, short term setup, it's very clear. This is a wave 1, wave 2, right? We started a blasting move as wave 3 here. So obviously subdividing 3.1, 3.2, 3.3. Last update on Friday, 3.4 will come, then 3.5. As soon as this happens, probably by 16th, right? This entire setup by Tuesday midday or Wednesday early morning, we can finish this setup. Then we go for a what? A wave 4 of smaller degree. Okay. Before all this, you must understand one thing is where you are standing on a higher time frame. So this is what is the difference between the regular textbook analyst and what we do, right? So we look at multiple time frames. Time frames is very important because higher time frames will trigger a larger trend change. Okay. So from here, your 20,976 level, right? We were seeing a 4th wave here. So this is your 5th wave. Now question is, before the wave finishes, you must have an idea till where can it go. So using your fib extension, if you put your fib extension just to have a rough idea till where can it go. If you see this, as expected in normal terms, we see 50 to 60% extension. But if the move is a little bit hard and fast, it can also go to 78.6 extension. That is nothing but 22,125 level, right? So it is normal in any case if the market wave 5 gets extended to reach to 22,125. So keep this level in mind. We'll revisit it later when we build a strategy for this. Okay. Here, very simple. If this is your wave 3, right? Generally, it does not happen. It does not extend much. But some cases, if there is a emotional manipulation, meaning if they want to change the sentiment of the retailers, here it is very, very clear. The sentiment became bearish and all the retailers were confused of the direction. You saw the buying and selling figures. Again, buying and selling figures is pointless. If you actually look at the market data, that is a very lagging indicator. So it's pointless for you to go and read every day who's buying, who's selling, which institution, domestic or foreign, how many crores they bought. It's pointless completely. How we anticipate the market before it turns is more important. Okay, not after the end of the day, whatever news they tell you, it's all bullshit. Going forward, you have 22,125 level, right? So what are we anticipating for the next 2 days? At least we want to see a 3.4 drop to come. Okay, 3.4 drop and 3.5. Now this is where your role of an analyst you have taken place, right? Now you have to plan a trade setup. You have to look for a risk management also. So in the risk management, you have to decide your risk per trade, right? And then your analyst tells you that 21,125 is the zone from which it's possible to have a deep correction or at least sideways. That is what is called a time correction, not a price correction. If the market completely goes sideways, it's called time correction. Okay. Keeping that in mind, what do we have? How can we build a strategy now? Above this level, right? Above your 21,500 level, if this is a wave 2, if this is any wave 2, let's say it's 3.2 here, market will not come back to touch it. Okay, there's another case, bearish case. We have to prepare for all scenarios in case, tomorrow market falls and crashes. We have to prepare for that also. So if you don't have any position, right, how do I plan for that now? Again, I'm not going to tell you to buy or sell. I'm not an analyst who's not a registered analyst, so I cannot tell you that. It's illegal. So what I'll tell you is what I am planning. Okay, so if I already have a position from here, right? Now, question is, why option selling? Why option selling? Why not buying here? Very simple. This is your wave 5. Wave 5 minimum requirement is to break the wave 3 high. Okay, that's all. It has broken it. It can turn down and fall anytime. Okay, if you're in option buying position, your risk is little, but you will make zero profit. Why? Because entire decay will happen in your options. If you have sold your options from the level of 21,450, at this stage, I told you the premiums were very, very high. Okay, let me just show you an example. This is Sensible website. I think many of you already know Sensible. This is just, strategy builder. Again, I'm not showing you how to trade. I'm telling you what I saw in the market. It's very important to make that distinction. Consult your financial advisors if you are considering any trading activity in the markets. Okay, so on the 9th or 10th, okay, market was trading around 450, 21,450 level. If you see the option of 21,300, right, that's nearly 150 points away. Right now it's trading at 11 rupees. Okay, 11.8, correct? If I add a hedge to it, I added a hedge of 20,700. Okay, on that day when there was a fall here, right, when there was a fall on that date, it was trading at 100 rupees premium approximately, and your 20,700 was trading at 10 rupees premium. Okay, so per lot you have for 4,500 rupees, that is 10%. So question is, people think option selling you need what? Minimum 1.2 lakh, or that is the margin required. Okay, the capital what you require once you add your hedge, right, it comes only to 51,000 rupees. Okay, here if you add your lot size, so generally if you take a 10 lot size, whatever lot size, depends on your pocket. So 5 lakh rupees, out of 5 lakh you make 45,000 in a week. Okay, out of 5 lakh you make 45,000 in a week, right? Again, don't get don't start building up your plan like this. This is not how you plan. This is how you plan a setup strategy. Okay, it only depends on how market reacts from here. Here we had a very huge probability that market is going to turn, and we know that because this is a wave 4, right? So again, safe side, nearly 150 points away, 150 points away option strike price you've taken with hedge. Okay, so within couple of days, what is the current market price? What is it trading at? Right, currently it is trading at 11 rupees. So already you have 90% gain in this, 90% gain. Okay, so this is what is the beauty of option selling. In after a wave 4 you go for a wave 5, you play it safe, the risk, till where wave 5 can go, right? So now coming to the next week part, if market goes like this, now if market goes for a 3.4 setup, most likely this will happen. This is a primary setup. Okay, and then 3.5, there is no point again shorting the market in a wave 3. It can surprise you anytime, right? So what is the best way you can plan? Because after 3.5 you have two options. You go for a price correction or you go for a time correction, right? It goes sideways market. Okay, this is again not time analysis, we are only doing price analysis here. Okay, so 3.4, 3.5, we go for a correction afterwards. If you're already holding an option selling position here, right, what you can do as per the setup here is that I will be looking for a option selling on the upside, right? The call option here. So what will I have? I'll have this entire range to play with. Okay. Again, you're targeting wave 4 here, right? This will be a 5.4. You are targeting this wave 4 as a sideways correction or a price correction, anything. You are looking for a upside and downside option selling position. This gives you a huge range to play with. You'll have good time decay. Now, I don't emphasize, again, I'm telling you, I'm not teaching you how to trade. I'm just sharing an idea which I have. Okay. Now, only and only if 3.5 is completed, we can look for a fourth wave setup. Very important. Only and only if 3.5 is completed. If you take prematurely trades in the market in a wave 3, again, let me repeat, you never short a wave 3. You will get wiped out. So only and only if 3.5 is completed, you can look for a wave 4 setup. Okay. Now, going into next week, very important. 16th, right? 16th is your Panchak mid-day. So from there, it's possible we see a correction. So again, if 3.5 wave is finished during your 16th and we have 2 days more for the expiry, it will be a very, very good setup for your month end as well as your weekly expiry, right? To play a wave 4. Okay. This is what I'm looking for in the next couple of days. Now, as usual, what do? We prepare for a surprise move also, right? So in case there's a bearish sudden drop in the market, why I'm even considering this is very simple, because if you see the futures chart of Nifty, right, spot chart has already made a new ATH, right, all-time high. Here, the futures chart has not yet crossed the all-time high, right? This is uncommon. Usually, futures charts moves ahead of spot chart, but here what has happened is your Nifty futures chart has not yet broken the all-time high. So what do you do here, right? There's a difference here. It's very simple. Unless you plan for this beforehand, you will not be able to catch it. You will be caught on the blind side. So what is the alternative structure here? The alternative structure is very simple. This is your A wave. This is your B wave. You will immediately drop from tomorrow onwards for the C wave. Minimum expectation of this zone, which was the manipulation zone. This was an ABC structure here. Let me mark it for you. This is your 21,594 to 21,726, right? This entire zone is going to be minimum retested. Why? This also has to have a logic, because if this is your A, B, C wave, right here, this entire move is a pump. This entire move is a pump. If you go down to a smaller time frame of 5 minutes, you can see that this is a small 1-2 wave, straight gap up and single direction on the upside, right? This is what we call as a pump. Why? Because hardly there has been 38 to 50% correction in the entire internal structure. Okay. So this is what is called a pump, and immediately this entire pump will get retraced. Okay. There's a gap here. We call this a volume gap. This has to be retested or filled again. That is only and only if this is a ABC structure. Now, how do you identify if it's ABC, if suddenly market is going to fall, or we are going for a 3.5, 3.4, then 3.5 like this? You cannot decide that. No one can decide this. Market only will show the path, right? So you have to wait. Again, if you are holding no position, you can't do anything. You can't short wave 3. You have to wait for a 3.4, or you have to wait for an N pattern. This N pattern will tell you, guarantee that yes, market has finished a small intermediate top here. It is falling for 200 points at least. Okay. Again, now it depends on you how you look for an option buying, option selling. It's up to you. I've already told you what I prefer. I'm already holding some longs here. I don't want to add any new longs simply because of this reason. Once I get confirmation that this is not going to fall, okay, and we are going for a sideways 3.4 only, and then 3.5, right? I'm not going to add any longs here. What I'm going to do is I'm going to wait for 3.5 to finish. I'm going to play the the fourth wave here, right? How? I've already told you, using the range, right? Using the, they call it a triangle or straddle, whatever you want to do, it's up to you. Again, what I have planning, I've told you. Okay. This is a very important setup. And like I told you before, I gave you 3 crucial dates. I think it was months back, in November 7th or 17th. I've already told you guys. Watch these dates specifically. I've told you, right? 27th to 28th November. What did we have here? Let me show you. We had an exact bottom, right? We had an exact bottom here. Again, it can be many other time methods using GAN or Astro. Again, I don't discuss that on a public video. The only point I'm telling you here is to make you understand the value of time analysis, right? It has to go hand in hand with your price analysis. It's very important. After your 28th, I told you another date, which is your 11th to 12th December, right? So it is exactly here. No, sorry, this is the point here, right? So we got an exact low here, swing low, and then blasted again. So there were 2 points. Now the third point I told you was 11th and 12th Jan, right? We made another swing low, another high. Now the question here is, right? The question here, I've already showed you this chart. What happened last year exactly before your budget? Let me show you again. Okay, so we are standing exactly in the same 2023 now. This is your New Year's high. We had a drop, a push back higher. This was your 12th. Again, Fed event was there that time. This is your volatile candle, right, of your Feb 1st, 2023, your budget day. What happened here? This is your 23rd to 24th time zone. Okay, market got pumped into the time zone and dropped in the last week. Okay, first Feb, again a volatile candle. Now if you look at the chart of what we are forming right now, exactly New Year we got a high. Okay, New Year's we got a high. We had a choppy session, right? Same again, 11th and 12th we had a drop. Till then market is getting pumped. Now as per your structure also, this is a wave 5, right? So if we get a sideways to choppy structure next week after a new high, all-time high, then in the last week, early last week, we make around 22nd to 24th, we make a high. It is a very high chance we drop till your budget. So your pre-budget move can be a drop, right? Post-budget, again, we'll see what happens then. Before that, we have to see what happens in the next 2 days. It's more crucial. Okay. So this is all I have for you guys. If there's any update, I'll pull it up. So do follow. And if you like this video, definitely share it with any of your friends, anyone who you feel that they want to learn market structure. Again, I've put up an entire course in 4 different languages, so which is suitable to you. You can look for it, and in the description I put my contact. So if you have any questions, queries regarding that, or you can put it in the comments, I'll reply to you as soon as possible. All right, so thank you guys. I'll see you in another video.